Hi guys, you are welcome to my channel. Today we'll be looking at how we can trade gold using some MetaTrader 4 indicators. Alright, I have two windows. I have the main window. This is my main window. And I have indicator window 1. This is indicator window 1. So let's look at the indicators on the main window. We have moving average, 21 period exponential moving average. Apply to close, color is red. We have fractals. We have another moving average, 200 period simple moving average. Apply to close, color is blue. And then we have the last moving average on the main window, that's 50 period exponential moving average. Apply to close, color is green. So how does this work on the main window? So if price moves above on any time frame, really, if price moves above all indicators, like you can see price moving above all indicators around here, okay, you count 3 candles, 1, 2, 3, okay, count 3 candles that is free from the indicators. This is the first one, the second one, this is the third one. The close of the third one is your entry. Now, a bit below the candle, the last candle at the start of this fresh leg, this is your low. Just place your stop loss a bit below the low, probably 1 or 2 pips below the low. Now your take profit will be ratio 1-to-1 of this height, or you can always trail with stop loss as price moves up. So, but all for you to buy, price must cross above all indicators, and then you count. Since you are buying, you count 3 free bullish candles like this, 1, 2, 3, before you place your entry at the close of the third free bullish candles. This candle is not free, but it's lapping across the indicators. You need to wait for the development of 3 free candles before you place your entry. Now the low of this particular leg push up, the low is your stop loss. You can measure from here to here, and then you can determine your ratio 1, like from here, from the low to the entry measurement is going to be your take profit. Okay, that will be your take profit. Okay, if I move to a higher time frame, okay, that will be your take profit. Excuse me, do I measure it now? Okay, let me see if I can measure it properly. On the 1 minute, that's where I got my signal. Got my signal from the 1 minute time frame, and I'm trying to measure the take profit from the low to price entry. So let's just assume it's to that limit. So my take profit will be 3363.557, assuming that's the height of where my low to my entry is. So that's that for that particular trade. Here is another trade where you can place your buy entry. You have this is you can enter your buy after 1, 2, 3, this third candle. You can place your buy trade here. You can enter here, 1, 2, 3, the close of this particular candle, the close of this one, this very one, the close. You can place your buy trade here. Now the low, this is the low. Okay, measurement from the low to that area, ratio 1 to 1. You can measure, you can have your TP at that level, and of course price moved up. Your stop loss will be here below this low. Okay, just a bit below this low of the push up. This is where your stop loss will be. Then from your stop loss to your entry will be your buy, your take profit. Let's measure it and see. Okay, so your take profit is around here for that particular trade. Okay, and of course that got triggered somewhere around here. That got triggered somewhere around here. So that's for that trade. Another trade, there is no trade here. There is no trade here around here, since the candles keep testing and lapping across the 21 moving average. So, but let's look for another trade. Okay, there's a trade around here. You have a trade around here, a dip, then first candle, second candle, third candle. This is the third candle. Now the close of that third candle. This is the close of the third free candle. Okay, now here will be your stop loss, the low. That will be your stop loss. Now the measurement a bit below the stop loss, the measurement from here to here. Now the same ratio is your take profit, or you can always move trailing stop loss. Okay, can always trail with trailing stop loss. So that's for bullish scenario. Let's look for a bearish scenario. A bearish scenario, you have price dipping below all indicators like you have around here, but you need to count 4 free bearish candles. You don't have up to 3 free bearish candles. You don't have up to 3 free bearish candles around here, but you have somewhere around a 1, 2, 3. Okay, this is the third free bearish candle. So the close of that third candle is your entry. This is your entry. Now the high of that leg, this is the high of the leg. That will be your stop loss. Now measurement from this high down here, the same measurement is your take profit. Now that's for indicator 1. That's for the main window. For indicator 1, where let's look at the indicators on indicator 1. We have MACD 12.26.9 apply to close. No color for the main and signal. Then you have moving average 250 period, linear weight, first indicators data color is blue. You have another moving average 200 period, linear weight, first indicators data color is black. And then the last indicator 1 period, linear weight, first indicators data color is red. So how does this strategy work? When the red moving average, when it crosses above all other moving averages, the 2 other moving averages, this is your buy signal. Now when it crosses below, like you have a cross below here, this is your sell signal. Okay, now the alignment of the signals will guide how you should start to look for. If you have a signal on, if you have a signal on the indicator window 1, okay, like you have a signal around here, start to look for 3 free candles around here. Start to look for 3 free candles. That's for bearish scenario. Now for bullish scenario, if you have a signal on your indicator window 1, start to look for 3 free candles as a follow-up, okay, or as a confirmation for this signal you have here. Look for three free candles as a confirmation of the signal. Of course, this is a break above all indicators. Then you start to count 3 free candles. This 1, 2, 3, 1, 2, 3. So your entry will be somewhere here. This is the low. From here to here, you measure, and your take profit will be ratio 1:1, which is somewhere around here. So that's how the strategy works. It's a good strategy, but you make sure you test it on demo before going live. Test the strategy on demo before going live. If it works on demo, then you can start trading with a live account. Do not go live on a new strategy that you've just learned on the internet. You end up losing your money. Make sure you test it on the demo account first. Back test it. Be sure to understand every aspect of the strategy before going live. That's that for today's video. If you like the video, why don't you smash the like button? If you're yet to subscribe, go ahead and join us. Smash the subscribe button. Share the video to your friends and loved ones. And you can visit our website www.beanfxtrader.com to learn more on this strategy. Till I come your way next time, it's bye for now.